If you're serious about learning trading in 2026, this is the video for you. I'm not here to teach you everything I know. I'm here to teach you everything you need to know in order to start trading today. By the end of this video, you know how to identify market bias, execute a complete trading strategy, manage your risk to survive losing streaks, and avoid the mistakes that keep traders stuck for years. And even if you're a complete beginner, don't worry. Before any major section, I'll quickly explain the technical terms you need to know so nobody gets left behind. If you already know them, you can skip ahead using your timestamps. But before we start, I want to make one thing very clear. Watching this video alone won't make you profitable. Just like watching Hikaru Nakamura won't make you chess grandmaster, and watching Demetrius Johnson won't make you UFC champion. This video gives you the map, but my promise to you is this. I'll show you how exactly to practice it, so after the video ends, you're not wondering what's the next move. Now, if you're ready, let's get started. Chapter 0. What am I looking at? Guys, you're looking at the chart. Horizontally, this is time, and vertically, this is price. One of the first questions you may ask is, what are these guys? What is this or this or this stick thing? What is this? We call these things candlesticks. These represent how the price moved in the past. You can also look at them like lines or like bars or so many other ways. This is our candle open, this is our candle close, this is its high, and this is its low. It's like the market opened there and went down till there and get up there and open somewhere up here. See? Yeah, give or take. My drawing is trash. Of course, it's not always this clean. Imagine price starts here, then goes up here, and then goes down there. It moves so much, and at the end, it ends here. See, this is the open, this is the low, this is the high, and this is the close. For the green candle, this is the open, and this is the close. For the red candle, it's the other way around. They're the opposite direction. The next thing you may ask is, brother, why are we here? What are we doing here? We're trying to trade. Imagine this. This water bottle. Imagine the asking price for this is like, I don't know, $5. So you buy it because you're thirsty or you want to go to the gym, right? 2 days later, the water bottle costs $7. Did you make profit or you lose money? You made $2 in profit. In the chart, imagine you buy here and this is the $5 price. And if it goes up in value, for example, up here, it's now that $7. There you go. You made $2, right? But what if it goes down? What's happened then? For instance, price goes down to $3. What happens next? Now, you could have bought at $3, but you bought at $5. So if you think about it, you lost $2. I'm trying to explain it as easy as I can, so I'm doing my best. Now, when we're trading in the market, it's like we're trying to recognize the patterns and make some profit in the market. Take a look at this example. Imagine you're risking $100. When our stop loss gets hit, we're losing $100. But what if we proceed to win this trade? Then we'd win $300. Oh my God, so if you know what we're doing, we're gonna make some cash. And this is why you're here. I'm gonna teach you how to earn cash. Then you would experience these kind of scenarios. The next thing you may ask is, what are these highs and lows and what are these movements? What are these called? This is what we call a swing high. Swing high. Nice. This is what we call a swing low. Swing high, swing low, swing high, swing low. You get the picture. Look at this. This is a high, this is a low, this is a high, this is a low. But are all of these highs and low equally powerful and valuable? Hell no. This is one of those things that they don't teach you everywhere. In order for a low to be powerful, it needs to take out a high. In this case, this low didn't take out a high. It didn't go above here. No, it didn't pass there. So this low is not powerful. Weak low. But what about this low or this low or this low, huh? All of them take out these highs. These are strong lows. Of course, it's the same deal with the highs. This is a powerful high because it takes out this low. What about this high? Is this a powerful high? Hell no again. This is not a powerful high simply because it didn't take out this low. See, it's as easy as that. Now we're in the chart, in the big league. This is not a powerful high. This is a powerful high because it takes out this low. Right? Is this a powerful high? No, they didn't achieve this low. Didn't break it. This is a strong low. This is a strong low. If you count this or this or this, right? But what about this? Is this a powerful low? Yes, that was a tricky tone. I know, but this is a powerful low because we broke this high, didn't we? This is a powerful low. This is a strong low. What about this? Is this a powerful low? No. Why? Because it didn't achieve anything. Oh my God, just for that you got a golden trophy? Yes. See, trading is not about how complex something is. In trading, sometimes the simplest stuff can be the most important ones. So don't skip anything. Chapter 1. How markets move. Guys, this is the chart. The more you go towards left, you're gonna see the candles that happened like 5 minutes ago, 10 minutes ago, a year ago, 10 years ago, or something like that, right? This is the present time. As of now, it's 31st of July 2026. And if you go to the right, you're gonna see the future. Of course, we don't have the future because we're not time travelers. Besides left to right, the market goes up and down also. When the market goes up, like here or here, we call that the bullish trend, which basically means uptrend. Also, when the market goes down, we call that a bearish trend, like this. Practice time. This is a bearish trend. This is a bullish trend. Bearish trend. Bullish trend. I know you're not second grade. You get the picture. Now, next on my list is CHoCH and POIs. Imagine your chart looks like this. Something happened in the past. We don't care. This is what you see. Now you know this is a bullish trend. This means it's going up. But what if price does something like this? What happened? All of a sudden we have a strong high. This high up here went below this low. This is fantastic stuff. What's going on? We call this change of character. This means that the structure was an uptrend. It was going up. It was a bullish trend. But now it's not a bullish trend anymore. This time it's a bearish trend all of a sudden. How? Because we had a change of character. Instead of saying change of character, we can simply say CHoCH. So CHoCH stands for change of character. But what if it goes down? Does this have a name? Of course, the name for it is break of structure, BOS. So if the price continues a movement, this is a BOS, this is a BOS, this is a change of character, this is a BOS, this is a BOS, a change of character. You see the picture, right? You're in the chart now. This is our low. This is our BOS, break of structure. We're going up. Now this is another low. Is it a strong low? Yes, because it breaks this high. What do we call this? A break of structure, BOS. We had a change of character. Why? Because we were going up. See, we were going up. Now we're going down. Now this is again a strong low. But why? Because it breaks this high. This is our CHoCH. I know, I can hear you shouting at me. Some intermediates out there are shouting that this is a low also. Why are you not talking about it? Because this is a fractal low. Wow, what the hell? I thought this was a beginner course. What's fractal low? In order to understand the meaning of fractal lows, we need to understand time frames. I'm pretty sure you're familiar with these two because you already got the achievement for it. As I told you, the price opens here, it goes down here, goes up here, and ends in here. In what time? Like, how long is this going to take? Is it going to take 5 minutes, 36 seconds, a year, 10 years? That's a fantastic question. Now I'm going to give you another piece of the puzzle, time frame. So we're currently at the 15-minute time frame. We can go to 1 hour time frame. Let's see what happens. See? Now we're going to 4 hour time frame. Oh, wow. So what's going on? Take a look at this leg. We call these trends legs. That's something you can hear on the internet. You may think, oh, what's going on? Yeah, that's just this. Like, don't get overwhelmed. So yeah, take a look at this leg. This is in 15-minute time frame, which means from the time that the candle starts to open to the time that the candle finishes, it takes it 15 minutes. Like from here all the way, all those stuff that happen and ends in here, that takes 15 minutes. So if we go to 1 hour time frame, as you can see, all those 4 candles, see? Those became just 1 candle. But if we go to 4 hour time frame, see? 8 candles, they became just 2. Crazy, you got another achievement for that. Now you know that you can look at the market at different time frames. Maybe you want to look at it at 15-minute time frame, 4 hour time frame, weekly. But what if I told you that you can look at the market in 1 time frame and understand what's happening in another time frame? That's crazy stuff. From here to here, this is the 8 p.m. So if you go to 1 minute time frame, you can see that more easily, right? So back to 15-minute time frame, you can imagine this is the start, this is the finish. So the candle would do something like this. So it would be a green candle. Take a look at it in a 1 hour time frame now. See? This is that easy. But this is just 1 candle. What we're thinking about, like liquidities and those other like complex stuff, how we can understand those. My answer to that is that it's ridiculously simple. Just this is going down. This is a green candle, so it went up and higher up here, and it went down and it goes up again. So something like this happened. Let's see in the 15-minute time frame. See? This is looking at the market fractally. You see it in 1 time frame and you think of it and analyze it in another time frame. So instead of going to 4-hour time frame, 50-minute time frame, 1-minute time frame, going and confusing yourself, you see the bigger picture now. This is a fantastic skill to have. Chapter 2. Why price moves. Guys, there are two forces in the market, buyers and sellers. So just like you already know, when more people want to buy something, it goes up in value. Why? Because there's less of it available now. So we have a certain amount of supplies, for example, for these water bottles, I use this example a lot. And there is a certain demand. If the demand goes up, if instead of 10 people, now 20 people wants them, these go up in value. This is the reason that why some things are more valuable in certain regions and not in other regions. For example, if you want to buy a car in my country, you're gonna pay 4 times or 6 times the price you're paying in your country for a car that's like 10 years old. This phenomenon is called supply and demand, not that fucked up government thing. No, I'm talking about supply and demand. If there are more people willing to buy something, it goes up in value. If so many people have something and they want to sell it now, it goes lower in value. Why? Because there are more slots available now. In the market, there's a war going on, literal war going on over the price. And there are buyers and sellers like banks, governments, central banks, traders, institutions, many players are fighting for the price. This creates some repeated similar patterns that us traders, we use them and we make some money. That's about it. We refer to them as liquidities. One of the simplest liquidities we can look at is highs and lows. I'm going to introduce you to other liquidities also, but first of all, I'm going to introduce you to another concept. This one is super important because it's one of the pillars of my own strategy that we're going to cover in this video. Let me show you the 50% mark. Imagine you want to buy something. Do you buy it up here or you want to wait and buy it down here? Of course, you want to buy it down here because it's cheaper versus here, which is more expensive. So basically, everything below 50% mark is our discount and above that is our premium zone. In my strategy that I'm going to cover in this video, I'm going to teach you that you always want to wait for 50% and below to buy. This is super important. This saves you from so many losses. And just to make it clear, this is not the video that I'm going to go deep into all of these little concepts because I have separate videos on all of these concepts individually. And you can look at them in my channel and actually learn a lot. But this video is just a complete tour. If I want to do everything in so much details, it would take like 8 hours. I mean, you can subscribe and it helps me and you and you and me. Okay, let's shut up and continue. Chapter 3. Where we enter. Next on the list, we have our fair value gaps. This is another liquidity that is super important. If you look at it fractionally, the price was moving so fast that it's a huge, fantastic, powerful bullish momentum. The area in between here, nothing got tested twice. So we mark this area and we call it our FVG. FVG stands for fair value gap. This is a liquidity that shows us we have momentum in our favor. Let me show you a couple of FVGs. This is another FVG. This is another FVG. This is an FVG. From the high of this shadow to the low of that shadow, right? Next on the list, we have order block. So again, in a 3-candle pattern, if your second candle goes below the low of the first candle and the third candle closes with the body above the first candle, then you got yourself an order block. This is the other way around. You got above the low of the first candle, this time with the body. We don't care. Like, we don't care how did the second candle goes above the first candle, right? It can go with the body or with the shadow. We don't care. But this is the important part. The third candle, this is the third candle. It needs to close below the low of the second candle. This close with the body is super important. Again, we call these boxes body of the candle, and this shadows, wicks of the candle, we call them shadows of the candle. It goes both ways. So again, as you can imagine, this would be our order block. We can also draw it like this, or in this case, like this. You remember when I told you about the Fibonacci? Like, I didn't tell you the name, but the 50% thing. You see, above this 50% is where we want to sell. And in this case, below this 50% is where we want to buy. So we're basically saying we don't even care about this wick up here or this wick down here. This is how I work with order blocks. There are many ways to draw order blocks, but this is the one that I did my research on, and I know for sure that this works best, at least in my opinion and in my experience. So we add OB, it stands for order blocks. Let me show it to you. See, this is an order block. First candle, second candle goes below the low of the first candle, and the third candle closes above it. What about this? Is this an order block? Yes. Oh, but this is not 3 candles, this is 4 candles. But this is the moment I introduce you to my buddy, POI. This guy makes things super simple. POI stands for point of interest. When we are drawing our POIs, we just draw something like this. Or something like this. And we call it a day. Just like that, or like this. Super simple. Because you can imagine there's something going on in here. There's something going on in here. Let me prove it to you. We go to 1 minute time frame. This is 15-minute time frame. This is 1 minute time frame. So you see we have multiple order blocks, POIs, so many liquidities in here. All of these things together. We go to 15-minute time frame. I just said that by looking at this. This is fractal vision. Fantastic. Now you know about all of these liquidities, but there is something left that's super important. You can successfully find these on the chart, but you need that trigger to shoot the gun. In other words, you need a signal. You need something that tells you these liquidities are activated. See, when you have a key level like this, you're expecting a magic to happen. Like you go there and what? Should you buy down here, or you should wait for 50%? Like what should we wait for? Like the market moves down from there, but you're just thinking, should I enter or you should not? But where is the money? How did we engage? We didn't engage. Why? Because we didn't have the signal. Like, what was the signal? Imagine you're surrounding your enemies and you're waiting for commander's command or like some horn or something, and you're just waiting and nothing happens and they just leave. And you look at your commander and say, what the fuck, man? In order to not experience that, we have 3 signals. You need to learn these 3. These are super important. 3 signals for grabbing liquidity. First on the list is hunt, also known for touch and grab. When you have a POI and you went back to it, there's a couple of ways you can reach it. One way of doing that is with the shadow, with your wick of the candle. This is way better than reaching it with the body. But you know what's even better than that? If the candle was red, it would be way better. The other way around, we wanted the candle to be green. Why? Because think about it, it went up and down. We of course had a CHoCH in here, so we had a change of character in the lower time frames. You look at it fractally. It's way better than the green candle. So for hunt, it's better be with the opposite candle direction. Next on the list is sweep. Sweep is for when you have equal highs and you hunt above them and then proceed to go to the other direction. Basically, something like this needs to happen. These are equal highs and you hunt above them. And last but not least, break and close. That would be one of these scenarios. So you close above your POI, but then the next candle appears and it closes below the low of the previous candle. See, you closed above the POI, but then you close below the low of that candle. This is fantastic stuff. See this high? We close above it, but did we close below it, below this candle? No, we didn't. We did it here, and then we had our bearish movement. Chapter 4, my complete strategy. Yeah, it's been so long that I'm eating. This is called CHoCH, and we changed sponsors. I know many of you skipped to this part. First of all, cheers. I'm currently in my road to hit 100 subscribers. I'm 3 men left, or girl, we're not sexist. So I would appreciate that. Anyways, the first thing we need to talk about is bias. This is super important because if you know where the market is actually heading, there is more chance that your trades in that direction succeed. Imagine you knew beforehand that the market is going up today. Now, wouldn't you have a better win rate now? Of course you do. So now let me teach you how I check the bias. If you think about it, bias is about the direction of the market. So you need to go to a higher time frame. These are the 4 time frames we're monitoring for the bias. I use structure and top-down analysis in order to identify the bias. For this structure, you need to know about the valid highs and lows. In other words, strong highs and strong lows. And if you skip to this part, psych! Go back. Go back and watch them. I explained them fully in this video. It's 2 a.m. in the morning. Fuck you. Anyways, I'm starting with weekly time frame. We don't actually use it regularly. Like you just look at the weekly time frame when you're trying a new symbol. Currently looking at Euro USD. This is my symbol. You maybe look at gold, XAU USD, or looking at, I don't know what you're trading. You're looking at Tesla or whatever. These are all called symbols. I'm in weekly time frame. So the point of this is that you realize where the market is exactly going. Of course, I went back in time and this is a bar replay. This is 207, god damn it. But imagine if this was the real time. As you can see, the market broke above this high. These lows are really powerful. If you have your 50% mark, you can clearly see that this is a really fantastic POI. Mainly because we're going up, but this is above the 50%. But as you can imagine, it would take months or even years that the market goes down here. But the thing that we can actually use about this is that we broke out above this high, and this was a long-term high, and we broke above this guy also. So clearly we're going up. Then you go to daily time frame. This is way better. You draw your structure there also. See, this is again our breakup structure, our BOS. This time is way more clear. And about the top-down analysis, it says that if you go down here, we can go up. This is an ideal point to go up. Or we can wait for something like this to happen. Let's go to 4-hour time frame now. See, we're going lower and lower in time frames. To be honest, most of the time you're only using daily and 4-hour time frame. Most of the time even 4-hour time frame. And as you can see, this is a really fantastic place for you to trade on. Let's see what happens. Okay, the market went down here. Let me erase these guys. Okay, as we talked about in the previous sections, this is break and close. This is one way of getting that liquidity, this liquidity. Also in this case, this is called a displacement candle also. I explain it in the future. But overall, this is the bias. You have your highs and lows. This is your structure, valid highs and valid lows. Of course, you had your BOS, you went back. This is top-down analysis. You go to your POI, and then you go to the next chapter, which is the middle time frame, which includes 5-minute time frame, 50-minute time frame, and 1-hour time frame. Most of the time, we're looking at the 50-minute time frame. So let's go down to 50-minute time frame. What the hell? 1-hour time frame? Okay, we have 1-hour time frame. Okay, we can only, because it's so way back in time, like 207. In here, we need a change of character. Can you see the chain of reaction here? This is some fantastic stuff. And we have our change of character. This is fantastic. We can draw this, and when we come back to it, we want a displacement candle or a confirmation candle, and then we can go to 1-minute time frame. Let me draw my 50% mark. There you go. We have our displacement candle. See, we're going down and we hit our POI. Like here, we touched it. Then we get a powerful candle to the other direction. In this case, we were going down and we have a green candle, green powerful candle. The reason I emphasize on it being powerful is that if you think about it fractionally, this candle here shows momentum. This candle closes above this high. This candle achieves something. If you go to lower time frames, this achieved something. But this is a signal that you can go to the lower time frame and execute. So let's do that. Let's go to 1-minute time frame. Okay, there is no data, because this is like 20 years ago. Guys, I'm planning to show you at least 2 examples, and I'm gonna give you the full framework on how to do this strategy. But before that, let's take a look at this. This is super important. I'm gonna teach you about displacement candle. This is the structure and everything. You went below the 50% and into your POI. Now you need something that's so valuable, and that's your displacement candle. Guys, here size matter, I'm sorry. But so if it's small, it's no good. If you compare the size of this candle to the previous ones, it needs to be big. Now, if all of those candles are like huge candles, it's fine, but usually it's not. How big is too big, you may ask? Guys, we're not sending out a shuttle. This is a big candle. If this was the candle, it would be fine. This candle is not fine. This candle is fine. This candle is fantastic. These are not fine. So now that you know about the confirmation candle, the displacement candle, please, for the love of God, use it. So now let me tell you about the steps you need to take in order to use this strategy and earn some money. First, you're going to find your bias. You can find it in 4-hour time frame and daily time frame. Most of the time, you're going to use 4-hour time frame. In this case, the market is clearly going up. Then you go to your middle time frame. It's going to be on 15-minute time frame and 1-hour time frame. Again, most of the time on 15-minute time frame. As you can see, you went below the 50% into your POI here, and you had your CHoCH. Now you imagine you're up here. You're waiting for the price to go below the 50% and hit your POI, which in this case it does. Now you wait for your displacement candle like this, and then you go to your execution time frame. See, this is your execution time frame. The candle opened here, it went down there, it went up here, it closed here. This means that if you're currently in the 50-minute time frame, this is what you're seeing. You're seeing something like this. The price moved down and moved up to here. Anyways, you have your CHoCH, you went to the 50% or below, because you're going up, and now you need your displacement. There you go, this is your displacement. Now you want to open a trade. This is your stop loss. You're going for 3R. Of course, I'm going to tell you about the money management stuff in the video. There you go, this is the trade. There are a couple of questions here. What if this POI was this low? Where would the stop loss be? Genuinely speaking, if the stop loss is too close between these two, go with the safe one. Because imagine if there wasn't another POI down here. Would you open another position if this got a displacement? Just, you want to avoid opening more than 2 trades in each POI. When I say POI, I'm talking about the 15-minute time frame POI, like this. This is the guy I'm talking about. So now you're ready. Just take your screenshot. I'm going to give you 2 examples now. I'm at 4-hour time frame. The market is going down. You may think it's going up because it took out this high, but that's a trap, because going up had a goal. The goal was reaching one of these two guys, or somewhere above here maybe. Now that we reached there, as you can see, the momentum shift. So if we're talking about the bias is bearish. So now you tell me, what is the next move? We need to wait for that come back to the 50%. Just look at this. We're again at the 4-hour time frame. We don't need to be at the 4-hour time frame anymore. If we close above this, and then we know that we're aiming for that POI. We can also look at the 1-hour time frame. Imagine like this was the scenario. It was going up. Like we were somewhere around here. In the 4-hour time frame, we have nothing. Everything is tested. Oh, by the way, if you don't know about tested and untested, mitigated versus unmitigated, this basically means that you have a liquidity and you take out some of its juice. Like in here, this is a FVG, right? So the next time you come back to this POI, it's a tested POI. It's mitigated, which makes it less powerful. Anyways, back to the explanation. We don't have anything unmitigated in the 4-hour time frame. And we also don't have anything untested in 1-hour time frame either. Let's imagine if this was the scenario, we had our displacement, see a powerful candle to the opposite direction. We go down to 15-minute time frame. Now in here, we want a CHoCH. And no, don't go with one of these fractional bullshits. Go with one of these or these. Because this is the middle time frame. The majority of the time, you're spending your time in this time frame. This low is a fractional low. We're not in execution time frame. We're not in 5-minute time frame, or 1-minute time frame. Of course, this is a low in 1-minute time frame, of course, but we want a 15-minute CHoCH. So none of that crappy lows. We don't want that. Let's see what's going to happen. As you can see, we went above it. Why? Because this was a trashy low. This wasn't a CHoCH. If you would have opened a position here, like I imagine many of you would have opened a position here and did something like that, you would have get stopped out and you would have cursed me. I'm a nice person if you know me. So learn my strategy the correct way. Okay, I'm in 1-hour time frame because we don't have anything valuable here. Like we don't have any POI here. So I want to do something that represents both the bias. Did I say both? Both the bias and the 15-minute time frame, middle time frame, you know? So I'm in 1-hour time frame. I'm either waiting for this to happen, something like that, or a CHoCH that's visible in 1-hour time frame. In this case, this is a really good CHoCH. Do we get a displacement here in 1-hour time frame? Don't take a displacement in 5-minute time frame all of a sudden. No, if we're in a 1-hour time frame, we want our displacement to be in 1-hour time frame. If you really want to do it, the least you can do is wait for 15-minute, a clear, massive, like good looking, really good looking 15-minute time frame. See, this is our 1-hour time frame confirmation candle. You can go straight to 1-minute time frame or 5-minute time frame perhaps. Let's see what happens in 5-minute time frame. Let me draw my 50% mark. We can wait for this to happen. I'm gonna wait for that to happen. I'm not gonna, let me even go lower to like 1-minute time frame. So as you can see, there are multiple possible entries. There are many POIs. So this is the reason that I tell you put your stop loss number safe, because you don't want to open like 4 positions in just one POI. Or another solution is just simply go to like 3-minute time frame or 5-minute time frame. There you have less POIs, therefore less of a headache. Let me leave that. Okay, it didn't give us any positions. No, it didn't give us any positions. Chapter 5, executing the trade. Okay, there are 3 websites that you have to know when it comes to trading. Number 1 is TradingView. You can simply click here, then click on the symbol you want to trade. I don't know, Euro USD. And it brings you to your chart. Like you have your boxes, you have your lines, all of these things, perhaps your brush, all the things that you need to know in order to do your technical analysis. This is not the place that you place your trade, but this is the place that you analyze what you're gonna do with your trade. Okay, I'm confused. So where do we trade? You're going to do that on MetaTrader 5. You can click on this and install the app. You can simply watch a tutorial on MetaTrader 5 because it would take me so long to talk about it. But the only thing I want to tell you is that, okay, you get used to these sounds, is that this is the place that you can place your trade. If you want to open a position just right there, you can right click on here and you go to new order. There you have a couple of options. First one is market execution, which means that you can go in directly, like right now. then is your limit or your stop order or your stop limit order. Like imagine this is your chart and you want to open a trade here. The price didn't even reach there. So you put a limit. A limit guarantees when the price hits here, your trade gets open, and this is your stop loss, this is your target profit. When you put a stop loss, you tell the broker that when the price hits there, you're going to leave. So it automatically closes your position. To the other side, your target profit, we call this TP, we call that stop loss. This tells the broker that when the price hits that level, automatically close this trade. It automatically does a job for you. Who does the job again? Broker. Who's broker? Imagine this is the supplier and this is you, the trader. You can be the bank, you can be institution, you can be whatever. How are these buys and sells going on around the world? How are they connected to each other? With brokers. So when somebody wants to buy, what is he exactly going to buy? Because this is not stock market. We are not buying one share of Tesla or something. We're executing a trade, but what up against? What are we actually doing? This is exactly the responsibility with the brokers. They connect buyers to sellers. Lottage is your lever. Everywhere in the market there are buyers and there are sellers. If the market wants to go up, there need to be more buy lottage versus sell lottage. If the market wants to go down, there need to be more sell lottage versus buy lottage. If you want to open a position and it asks you about your lottage, how many lottage you're going to open. The name is volume, like how much you want to open. This is 1 lot. This is like 5 lots. Then it asks you about stop loss and take profit. This is a big headache. You can calculate it literally by hands, like pip size, lottage, like it's a math equation that we actually used to do like 4 or 5 years ago because I don't know, we were trying to hurt ourselves maybe. Or you can use these websites. You can just search on the internet like lot size calculator, MetaTrader 5, and like put your currency, put your all of that. This is one way of doing it. The other way is to have an expert. You can customize it as the way you want. This one's name is Glory Money Management. I've been using this for so long, and if you want it, you can ask me in the comment section. I send you the link. It automatically opens a 3R position because I asked it to, and it automatically calculates the lot size in order to put my stop loss to like $200 or the closest number equivalent to $200. In this case, it's $198.72. See, really fast and really close. See, it automatically adjusts the target profit, so we have the 3R. Again, you can customize it the way you want. I highly recommend that you have one of these experts, because if you don't have that, you need to calculate exactly when it's happening, and it's going to give you like if you plan to have like $100 stop loss, maybe it gives you like $110 stop loss. On top of that, you need to calculate it fast under pressure when so many variables are happening, and this is not a good thing to have. So having an expert is a really time saver, and also it stops you from doing some crazy mistakes. So get yourself an expert. Chapter 6. Staying alive. Let me ask you something. If you're opening a drugstore, you're gonna spend money buying drugs. FBI, open up! I mean, joking aside, you need to buy your supplies. You buy them at a certain price and you sell them at a certain price, and this margin is how you make your profit. So let me ask you this. When you were buying those drugs, okay, let me change my example. Imagine it was closed. Would you have counted that as losing? No, nobody does that. Everybody counts that as essential expenses. But here's the thing. When it comes to trading, people lose money. Like everybody loses money. Even banks lose money. But the difference is this. Many of you out there are approaching losses as if you're wrong. As if you're a bad person. Everything you know is a piece of garbage. It's not that. When you're losing, you're not actually losing. I don't even like the term losing trade. You know, to me, what is a losing trade? It's a trade that you don't go according to your strategy. You panic, you do some random bullshit. That's a losing trade. In the trading world, you can go exactly as the plan goes and still end up with negative. But the winning strategy that I just gave you, with the winning execution that you need time to master, if you combine these two and add a bit of trust to this equation, then you get yourself a winner. The only way you can fuck that up is not trusting it and doing some ooga booga bullshit. Now I'm gonna tell you about the win rate and risk reward of my strategy, and also how many trades does it give me each month. I tested my strategy for 15 years of the market, like bar replay, in 2 symbols, Euro USD, and gold. And I also traded for close to 2 years now, this last strategy. So now I know what's the worst losing streak that can happen. This way I don't lose my mind after a couple of losing trades one after another. I can give you the signal of my trade and you think, oh, I'm gonna get rich. And you're gonna lose a couple of times and you're gonna panic and you wanna like punch me in the face. But me, I'm just sitting there and I'm drinking the sponsors of the video, tap water. I teach you how to do this in the next chapter. But for this chapter, let me give you the results you've been waiting for. So overall, my strategy has 43% win rate with 3R risk reward, which basically means that each win has the value of 3 losses. So for instance, if you're risking $100, you're making $300 winning, but losing $100 losing. And on average, I open 12 positions in a month. This usually leaves me with somewhere around 50R to 70R in each year. But when I'm trading with my own money, I'm risking 3%. But if you want to trade my strategy with prop firms, just use 1%. And please, before ending the video, just watch the next chapter. That's super important. That if you don't watch the next chapter, you're not gonna gain profit with this video. By the way, there's another website you need to know of. It's Forex Factory. This website gives you the news. Currently, we're not in a trading day, so we don't have any news. But if you look at the next week, it shows you the news. Depending on the symbol you're trading, you want to filter this. For example, I just want USD and Euro, and you see I don't want like CNY or JPY or NZD. I don't want them. You can filter them, and you can filter like non-important news also. So you got options. Why do we need this exactly? The reason for that is that you want to close your position 5 minutes before the heavy news is coming up. If you want to know why, I have a video on it. It's a really sad story. Chapter 7. Becoming profitable. Back in the day, I was trading for a couple of years, but I wasn't profitable. So I decided to do one project. That one project took me like 9 months, but it actually made me profitable. This is it, guys. I've been recording for 10 hours straight. That's a record. First, you need to make sure that you completely know your strategy to its bones and everything. That one alone took me like 4 months, and I'm not even kidding. I tested everything, literally everything. FEGs, order blocks, POIs, rejection blocks, everything on different time frames, everything. I was confident with my strategy and I was ready to go. Now, if you have your strategy locked in, listen to this. Your next step is going to be forward testing. I did that for 15 years of the market. And yes, that long. You need to forward test for that long, not back testing, not some AI bullshit. No. Candle by candle, just like the way we did in this video. The least you got to do is just 3 years. If you do anything below 3 years, you're just fooling around. If you forward test multiple years, you're gonna see so many things. Like we experienced pandemic, we experienced Russia and Ukraine, we experienced USA and Iran, we experienced so many phenomena. So anything that can happen in the live market, you have kind of experience about it. Whereas if you just forward test for like 2 months and you go in the market, you're gonna experience something that you've never experienced before. You have all these data, why not using them? So I recommend going from 2022 to this moment. And yes, even if you're just gonna use my strategy, again, you need to forward test it from 2022 to this moment. Why? Because you don't know shit about my strategy. I trust my strategy because I've worked for it. You didn't work for it. I just gave it to you. So you have no experience whatsoever. How many losing streak? You don't know. I can tell you. 12. Wow, 12. Oh my God, 12. This strategy is trash. No, it's not. This strategy was profitable every quarter. Many of you guys go out there and forward test for like 1 month or a back test. Back test is just complete garbage. Back test for like 6 months. Not even that, for like 1 month, 2 months, like 20 days even. And you think, yeah, this strategy works. Brother, I can show you the result of my strategy having a 100% win rate in 1 quarter. But does my strategy has a 100% win rate overall? Fuck no. If you're not forward testing for like 3 years or so, you're lying to yourself. That's it. I mean, you can watch Levon Sekhanishvili like arm wrestle all day long, but you're not gonna get strong just by looking at it. It doesn't matter how many Tyson or like John Jones fight you've seen in your life. If you don't go to the gym and put those hours, you're not gonna beat anybody. So just to prove it to you, these are the forward test results for gold. But back then, the 2025 is not complete. See, this is 2022. See, TP is stop loss, so many other variables. Then we go to the next year, for example, like 2 years later, like 2022. Let's see what happened 2022. Now, assuming that you got your forward test in the bag, the next on the list is going to be journaling. Just take a look at this. Yes, it's in another language. It's in my mother tongue. Let me tell you what exactly I put in here. As you know, Mondays to Fridays are the trading days. In those days, I wrote down very important things. My thought process before I open a trade. What I was feeling like. Was I sick? sick? Was I feeling bad? What was my surrounding look like? Like were there so much noise, or was I in silent? Was I sad or I was happy? If I wasn't opening a trade and I was waiting for something, what I was waiting for? What signals I was waiting for? When I opened the position, was I panicked when I opened the position, or was just chill? After the position got ended, did I do anything weird? Was I feeling bad or good? Or if I was feeling really good about myself, that was a bad sign. If I was feeling very bad about myself, that was a bad sign. You need to feel neutral about yourself. One trade doesn't define whether you're good or bad. And after each day, I rate both my performance on gold and on euro. These are the two symbols that trade. And I highly recommend to you that do not trade on more than two symbols, especially if you're not currently making money. So as I was saying, I wrote my performance on gold and euro from on scale of 1 to 10. Then on Saturdays and Sundays, the thing I was doing was really valuable. I forward tested the previous week. Why did you forward test? You forward test for 15 years and all you're doing just forward testing. Listen to this. I forward test, and this may shock you, but sometimes you do different when you're forward testing. The reason to that is that you're not stressed. In the live market, you sometimes go blind. You don't see something, or you think you saw something, and so many weird shit can happen. You may jump in because you got panicked, or you want to revenge trade, or do so many bullshit. But the thing is, in forward testing, you usually do better compared to live markets, because after all those forward testing, you're now a master of forward testing. After a while, you come to understanding that if you just trust the process and you don't do anything weird, you can actually make some money. Everybody knows it, but nobody does it. It's weird. It feels illegal, but it's true. So my goal was to consistently get closer to that forward testing results. Usually when you're forward testing, you're going with 10 out of 10 results, because you're not doing any mistakes when you're forward testing. But in the live market, everything's slower, you're maybe stressed, or maybe you're waiting for positions for weeks. Not for weeks, so it never happened to me. Like weeks never happened. Like 2-3 weeks, yes, but more than that, I've never experienced that. But in general, you're thinking, this is the only thing I do. I'm a trader. I'm a full-time trader, for example. And I'm not opening a trade in single trade for like 3 weeks. What the fuck am I doing? Like, what the fuck am I doing? And you just go out there and do something weird and just fuck yourself over. Just trust the process, man. I went from, I'm pretty sure there's a 7.5 out of 10 performance. I went from that to a constant 10 out of 10, at least like 9.7, 9.8 out of 10 performance. Why? Because I simply trusted the process. I began to believe that I can do it. And so can you. Just trust the fucking process, man. If you watched to this moment, thank you for your time. I love you, and I'll see you in the next one.